Indicators are not tools to tell you the future or the market's next move. They are helpful assistants to manage your trade. If you execute a position only by checking the indicators, I can bet on you that you are gonna lose tons of money. Don't expect another result from such a trading position. So you may ask that, is there a way to know about the market's future movements? Yes, definitely there is. It just can't tell you when. But Liquidity Concepts can definitely tell you where the market maker wants to drive the market. Hello friends, today I'm gonna show you the beginner phase of Liquidity Concepts, the order blocks. Order blocks are by far most profitable trading concepts. Although in this video I'm gonna show you only the order blocks from the wide topics of Liquidity Concepts, you may even start making successful trades only by using them. Nowadays, me personally trade just with the help of Liquidity Concepts, such as order blocks, breaker blocks, mitigation blocks, and fair value and imbalance points. These terms might sound you as really hard to learn, but actually not. These concepts are master price action setups for sure, but not that hard to learn. If you watched a video about these concepts before but still cannot trade successfully with them, most probably the concept that has been taught was inadequate or totally incorrect. Cause I came across with many misleading videos about order blocks or other liquidity concepts. But no worries, I'm gonna upload a lot of videos to teach you all these concepts with the simplest and most explanatory way. Price creates lower or higher trends, and while creating these trends, it also creates highs and lows. But why does it do that? For example, let's imagine that traders consider this price level as an important point and decide to buy from this price, and price starts to go up. And when it reaches this high, it creates a correction. But why the price creates a correction? Because some of the buyers who bought from this price level decide to take profit, and this high might be an important resistance level, and some sellers might decide to sell from this high. And that's because this high is a resistance. Some other traders might put that high some limit orders that will create sell positions when the price reaches that point. So price declines and create a low here. Buyers might think here that correction is an opportunity to add some more buying positions. Or some other trades who missed the first pump might think that price is cheap enough now to enter to the market. After all, market is all about supply and demand, and price starts to increase, breaks the previous high and creates new high, a higher high. And again, for the same reasons, price starts to a correction here cause some traders wanna take profit and leave the trade. Then buyers come again and push the price to create new high, a higher high. I guess everybody understands how a market creates a series of swings and a trend. Now we have a trend here. So what is next? Like every trend, doesn't matter it continues for a short or long period, when the traders think that price becomes expensive for that specific time frame, more sellers add their orders with that selling pressure, the current trend is broken. The last low of the previous trend is broken. Of course, I imply here for an upper trend. The price closes below that low and we refer this break as market structure break. Because of this upper trend, market was creating new highs in row, but this time it couldn't break the previous high and declined to a lower level than previous low. So the market structure is changed. For the next move from the market, we expect a correction and to create a new swing to a lower level, maybe a lower trend or a range. Here I can hear you that you ask this question. Okay, new highs, new lows, we got it, but in which time frame? For 5-minute chart or 1 hour, 1 day, 1 week? Actually, all of them. You may come across with upper or lower trends in every time frames, but when it comes to making use of these moves as a trading opportunity, it's not easy to use these concepts on higher time frames like daily or weekly charts. Cause trends doesn't change with high frequency on those time frames. Of course you can use them as well, but it may take days or weeks to see market structure break on daily or weekly time frames. And as I said before, we should see market structure break to make use of order blocks. So traders prefer to look for market structure breaks or order blocks on lower time frames from 4-hour chart to even 5-minute chart. So let's explain what the order block is according to the concept we learned up to now. Order block is found on the last high of the market on that specific time frame. I mean, when we detect the market structure break, we point the highest high of previous trend and choose the last bullish candle and mark it as an order block area. If the candle is big one, you may ignore its wicks and just mark it from the up and down of the candle. But if it is a small one, I strictly advise you to mark the wicks of the candle as well. I tried to explain order block as simple as possible, and I'm gonna exemplify it on real charts as well, but let me explain shortly one more time. For the order block, we follow the last swing with red candles which break the previous low and mark the last bullish candle on that high as an order block area. So next step is we expect the price come to this order block for a confirmation and then creates a new lower low. But you may ask why. Most YouTubers miss this important point that should be explained at first. The price turns back to the order block eventually because the liquidity that the market needs is there. So what the liquidity is? I'm gonna try to explain this in a way as simple as possible, and after you understand the importance and the concept of the liquidity, trust me, you're gonna start to guess and understand what the market's next move will be. When the price breaks the market structure and starts to a new trend, but to the opposite direction this time, traders start to close their buying positions or stops out and price goes lower. When other traders realize this break, they start to execute short positions to make use of this new downtrend. And guess where do they put their stop loss orders? Of course, here above the last highest high. And also when the professional traders, whales, pounds, and all other traders realize the break and mark this point as an order block, they expect the price come here again for confirmation, and they add on these levels their limit orders in order to short the market. Of course, without a doubt, the market makers also know that the stop loss levels of traders are on that high, and also to drive the market to a low point, market makers also want to use other traders' money instead of theirs, and they want to come back to this point to activate all other sellers' limit orders, also send out the small traders out of the market by activating their stop loss orders. And mostly with long wick stop hunting candle, they accomplish their both aims. So by following the order block point, you may guess the market's next move, cause market is driven by money. The only aim of the market is provide liquidity, I mean money to the market, to ensure and keep its presence. Forget about all indicators, setups, patterns, everything, and open your eyes. Market moves to reach to the money. It creates swings and trends to reach that liquidity, and without liquidity, market cannot survive. Of course, I do not completely deny the importance of the indicators and patterns, but they are not the exact reason of the market's up and down movements. They are just tools that helps us while we are trading. As I mentioned before, order blocks can be found in every time frame, but traders mostly use lower time frames like from 4-hour time frame to 5-minute time frame, because it's easier and more frequent to come across with market structure breaks on lower time frames. My next video will be a backtest video about order blocks, and as I promised, I will keep uploading all liquidity concept videos in order to teach you breaker blocks, mitigation blocks, fair value gaps, and imbalance points in order to help you to become a successful trader. Friends, all my contents are free. I will never ask for money for an education set or paid groups. So please like and subscribe in order not to miss my next videos about how to become a profitable trader.